Right now, we take the national anthem, and thereafter we take Ican anthem.
Wear short dresses, very fair.
Over to you, Deacon Rocco. Deacon Rocco, unmute yourself.
Sorry. Good morning, my chairman, Ilupeju Bagada District Society, Professor Godwin Oyedokun. We thank you for your passion that you want all our members to learn at no cost. The Vice Chairman, Alhaji Kolawale Bisriyu, we thank you for your support. Our IPC, Elder Benga Omidiji FCA, thank you for showing us the way. To all our ESCOs, we thank you for being there always. I recognize all our Ican Council members that are present, including our speakers, the chairman and executive of other districts who have interest in our district. Thank you for joining us. And to all our members, you have been very supportive of all our programs. We thank you for coming up. Thank you for your time. I say good morning to every one of us. It's a busy day and it's a busy period for the members in practice. We will go in earnest. At this point, I will call on the chairman of Ilupeju Gbagada District Society to give us the keynote address. Professor Godwin Oyedokun, FCA. Kindly unmute yourself and speak to us.
Thank you, Deacon Rockwell, as I fondly call you. Distinguished ladies and gentlemen, I want to say thank you for having you here today. Of course, you will agree with us that the day we stop learning, that is the day we stop being relevant in the scheme of things. The chairman of our Forum of Fame has laid a good foundation in terms of protocol, and I'm trying to scan through if we have some other people that have joined us. However, in as absentia, I want to recognize all district pillars, especially Mr. Toby Abiola, Ican treasurer, and our district patron, the immediate past chairman of our district, who is also a council member, the coordinator of our district, Chibuzon. Thank you for being there for us all the time. Especially, I want to say thank you to Mr. Oladile Oladipupo FCA for accepting to be part of this, and he shall be discussing with us today audit engagement exposure, need for an exhaustive checklist. In the same manner, I want to say thank you to Mr. Oseme Obaloje for accepting to be part of this. At appropriate time, the chairman of this committee will be telling us much about them. The ESCO of our district has approved that we should not drag this training so that people can also go back to their various assignments. We also want to let you know that since we have started this district, we have not charged any member for any training of sorts, and I don't think we are interested in charging. The purpose of this is that God has blessed all of us, and we want to give back to the society part of those things that God has blessed us with. And I think if all of our members can be professionally and academically sound, then we can be sure that future is guaranteed. Some of us paid a lot to get to where we are today, and we want to thank God that we have resolved to also do this the way we know how best to do. And I also want to tell you that since we've been doing our training, we've been having support of our facilitators, even as short notices, they agree to speak with us. And I don't think there's anything we can give them that can replace their time. Of course, some of us know that time is even the money, and depending on how you spend it, that's how you will enjoy it. Authorities of my district, thank you so much for allowing me and my idiosyncrasies. The leadership of our district, I want to say thank you for allowing our templates to run without compromise. Thank you so much. And members of our district, if you are not here, we are not there. I want to believe that it's not everybody that we have on board today that are actually practicing. But if the plan is that in future you are practicing, wouldn't you rather be here? And again, even if you are not practicing, we are talking about that which is a major aspect of our accountancy training. And even when I'm not in practice, am I not supposed to understand what is happening in the audit environment? Thank you so much. All ESCO, I may not be able to mention all the names, but if I see you, just know that I've mentioned your name. Samuel Abe, Secretary, Alaji Bisiriyu, Deacon Rocco, Dr. Tosin, Akinwumi, Dr. Titilayo Fowokon, and Adedoyin, Abosede, Molara, everybody. As I see your name, I will also try to do so. And like Deacon Rocco said the other time, all the leadership of all that district that are here, thank you so much. And as we note your name, we also recognize you, because it's not easy to leave what you are doing to be part of this. Thank you so much. Madam Sandra, I also recognize you. Thank you for being here all the time. Shegun Ishola and the host of order. Please, if you are joining with unidentified devices, please try to rename it so that we can take appropriate notice. Abbas Fayomi, thank you for all you do in terms of even audit trade for some of us. People that join with iPhone and the likes, please rename your system so that we can have you. And the vice chairman has told us that we should put our name appropriately, because we will send this to Ican for appropriate MCPE. I also want to place on record that you should watch out for every other thing that we have in stock. I recognize the fact that all our guys are ready to talk. I'm seeing Oladele's picture. Thank you so much. And when you finish this delivery, just send that headphone to me. I need it. Oluwani Vishe. Please, because of the nature of everybody, today we do not have temperament to accommodate aberration in terms of people disturbing us. We don't need your video. If you are not the speaker, don't use video, because some of you will on your video, will be seeing things that we are not supposed to be seeing that you are doing in your offices or your room. Please, off your video. We will not warn again. Just note it. We will not warn you again. And once you are removed from the system, you know you cannot join with that name again. Okay? And for those of you that are fond of muting yourself in the process of something, and whatever you are discussing in the market, they will not be interfering with what we are doing. We will not warn again. We will just remove you and either put you on the waiting list or remove you finally. And it means you cannot join again. I'm so sorry if this is too autocratic in nature, but people abandon their job to be here, and we don't want any issue with them. So just note that once you are removed, it means you are disturbing us, and there's no excuse. Thank God we did not collect money, so you cannot say we should refund you. It's on this note I want to hand over back. By the time my IPC is on board, I've been trying to look at him. By the time he's on board, he will be charging us with one or two things. But for now, let me hand over back to the committee to quickly let's have this. And our speaker should please also work with time so that everybody can go back to their respective activities in time. Thank you so much, Deacon Rocco, for this wonderful piece that you have put together.
Thank you, Professor Godwin.
So, Deacon Rocco, while you are doing that, Deacon Rocco, while you are doing that, I noticed that Ogagbenga Omidiji is actually coming in. I hope he will quickly say something so that it doesn't be that he will have to wait. He's joining. I don't know what happened to his. So let's allow him. Let's allow him. Okay, he's okay. So we are fine.
He's in now.
He's in. Okay, now Edagbenga Omidiji. So you have to. We have 2 minutes for you. We've been waiting for you. So just give us your opening thoughts, and then we go on with our lecture. We've been waiting for you. Thank you for joining us, sir.
Okay, thank you very much. I'm sorry for joining late. I was actually in transit. The chairman, distinguished ECHO members, and distinguished members of our district, once again, it is a pleasure to be gathered here to again share knowledge, and this time around specifically directed to our members in practice. This is one of the uniqueness of the model district. We've gathered together today to develop our skills to learn more. And as usual, it is coming to you free of charge, unlike what is prevalent around. So I want to encourage all of us to always take time out to enjoy some of the goodies that comes from the district. We all need to be active members. We all need to play our parts, and we all need to be up and doing. On this note, I want to welcome everybody. And also, I'm sure we'll have some guests who are not members of the district who are joining us. I want to welcome you all to this promising session. Thank you very much.
Thank you, my
Our
IPC
IPC.
and our council member. So let's continue. Please, if you are not the one talking, don't unmute yourself again. And we do not need video. Fashion or Rotimi, please, we don't need video from anybody. Please. It's only our facilitator that are permitted to show us their video. Please, 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 please. Over to you, the coordinator.
Okay, thank you, Professor. Kindly, please, I want us to get this announcement because once the speaker comments, we may not be able to have opportunity to come in again. As many that has question, maybe now or during the lecture, please send in your question through the chat. Put your name and your membership number. And some can as well send it to idgcican@gmail.com, the district email address. Thank you for that. At this point, it's time for us to introduce the first paper presenter to us. And the first paper presenter is Mr. Oladele Oladipo. Mr. Oladele is a partner at PricewaterhouseCoopers, PwC, and he has been with the firm for over 21 years. He specializes on providing assurance and advisory services to entities in the FMCG, manufacturing, aviation, logistics, agribusiness, and healthcare sectors. He has worked in the Nigeria and UK office of PwC, serving listed entity and multinational companies of various sizes. In addition to leading client service management, Dele leads the assurance, learning and development and quality review functions of PwC in West Africa. In his role, he has primary responsibility for identifying, developing, and nourishing client relationship in line with the firm's risk management policy, ISMQ1, and the International Code of Ethics for Professional Accountants. Dele is a fellow of the Institute of Chartered Accountants of Nigeria and currently sits on its governing council. He also sits on a number of committees, including the Institute's Technical Research and Public Policy Committee and Ican Accountability Index Steering Committee. He was until a few years ago a member of the Executive Committee of the Ican Lagos and District Society. Dele passionately follows football and Formula One. He also loves spending time with family. Dear professional colleagues, it's my pleasure to introduce to you this morning at exactly 10:21 a.m. Mr. Oladele Oladipo, FCA, Assurance Partner, PwC Nigeria, to take us through audit engagement exposures, need for exhaustive checklist. Kindly put your hands together as he unmutes himself and speak to us. Over to you, Mr. Oladipo.
Thank you very much. Good morning, professional colleagues. So just to be clear, my name is Oladele Oladipo, taking over from Mr. Oladapo. We are not related, but you can argue that we are related through Ican. All right, can you hear me? Just confirm you can hear me, please.
Loud and clear. Very well.
All right, thank you. Thank you for that introduction. Mr. Chairman, good morning. Thank you very much. Mr. Benga Midiji, the IPC of this district, good morning to you too. in the interest of time, please permit me to stand on the protocol already established by the chairman. But I feel very honored and privileged to be with you. I've seen a number of colleagues who have even been my tutors in the profession here, Mrs. Titi Fowokon, for example. So I greet you all and thank you. I know that Mr. Chairman did mention in his introduction that this is going to be very concise and straight to the point, largely because we all have a number of things to do this morning. But he also mentioned one thing which I'm sure a number of you have heard before, but just to reiterate that the day we stop learning is the day we die. So for me, in addition to talking to you here, it's also an opportunity for me to learn. I know a number of you are also in professional practice, so it's important for us to learn. And for even those of us that are in business or in the academia, it's also an opportunity to learn. Because if you are working in an organization that is being audited, please, can you confirm you can hear me?
Louder, very well, louder. Very well.
Okay.
Very well.
Okay, because somebody just sent a message that he or she can't hear anything. Okay, so in the interest of that learning, I'll also urge members, even those who are not in practice, to also try and take one or two things away and hopefully use them in their interaction with auditors. So at this point, without further ado, because I took note of the fact that the anchor did speak about the time, it was 10:21, now it's 3 minutes more. Without further ado, I would like to start the presentation. Please confirm you can see my screen.
Yes.
All right. So this morning, over the next 35 minutes or so, we will be talking about audit engagements, need for an exhaustive checklist. And really what we'll be looking at is, first of all, we need to understand what audit engagement is, and also need to understand what auditors are trying to do when they are performing an audit. We all know that the ultimate end product of an audit is to issue an opinion on the financial statements. But what is the process, right, that the auditor takes in issuing that opinion? And what are the things that the international standards on auditing require the auditor to do? So there are a number of things, there are lots of things that the auditor will do to comply with the auditing standards. There are a lot of things the auditor will do to ensure that the financial statements that is reporting on also comply with the accounting standards, in this case, IFRS. Now, because those responsibilities are very, very humongous and they span a number of standards and regulatory requirements, it is important that the auditor will have something like a one-stop shop that he can look back at the work that he has done, satisfy himself that he has done all the procedures required of him by auditing standards, all the procedures required of him by regulations before he issues that opinion on a financial statement. Ultimately, the biggest risk is the issuance of an inappropriate audit opinion, i.e., an opinion that is inconsistent with the facts of the matter, that is inconsistent with the evidence that has been obtained. Now, because these things are a lot, you cannot be going through all the standards every time, going through the auditing standards, going through the IFRS every time. There is now the need for the auditor to have a checklist, something like a standardized suite of procedures that he can do, go through that checklist at certain stages during the audit, including up to the time that he's issuing the opinion, go through that checklist and be able to satisfy himself that he has done a proper audit before he issues the opinion. And this checklist, by the way, will also be part of the auditor's working papers that is going to retain. So those checklists in themselves are also a record of work done. So we'll look at the types of checklists that the auditor is advised to run through his engagements and retain in his working paper. We will look at the various stages that they can be applied. In the interest of time, we'll probably limit that detailed level review or discussion to a couple of the checklists, but within these documents, I've provided links to some other resource materials, and I've also shared them with the coordinator, so you will be getting them after this program. Now, checklists are very good, but checklists also have certain limitations. So in using those checklists, we then need to be aware of what those limitations are. Now, let us start by setting the tone, right? What is an audit engagement? An audit engagement, like I said, is that engagement where a practitioner is engaged to issue an opinion on a set of historical financial statements that have been prepared by management. Now, when the auditor goes into a relationship with a client, he assumes a number of risks onto himself or onto his firm. And this can be either business risk, legal risk, or reputational risk, right? As an auditor, when you take on a client, you are assuming a risk of association with that client, even without you doing any work, right? But the fact that you have even been engaged by somebody, and if something goes wrong with that entity or with that client, by association, there could be reputational issues to the auditor, there could be financial issues to the auditor. Now, when the auditor then does work for that entity and he issues an opinion, if he issues the wrong opinion, then there are also additional exposures that the auditor needs to deal with. Now, I'm sure that if you have been following the business and financial news in the last few years, we have all seen cases of auditors being called to question on the opinions that they have issued around a number of entities. And this is something that largely is happening in the West, but trust me, it's also going to come to Nigeria very soon, where the work of the auditors and the role of the auditors, rightly or wrongly, will be brought under the microscope. So it's important that as auditors, we pay very, very high level of importance to the risks that we carry and how we discharge our responsibilities in response to those risks. Now, what is the engagement risk? We keep talking about risk, right? There's no way you can do an audit without mentioning risk and quality management, right? Risk are those things that you are exposed to, your reputational risk, your legal risk, even the financial risks that you undertake. But how do you address those risks? It's about having a good system of quality management in place. And part of that system of quality management is the quality of the checklist that you use on your engagements. Now, engagement risks are of two types. It could be audit risk, and it could also be business risks. Now, audit risk has three elements, and I think a number of us, if you go back to our Ican practice manuals, and if you go back to the lectures we've done in obtaining our certificates, you will have been exposed to those risks. But from the International Accounting and Assurance Standards Board's glossary of terms, audit risks are divided into three: the inherent risk, the control risk, and the detection risk. Now, the inherent risk is the susceptibility of a class of transactions or certain account balances to misstatements in the numbers, and those misstatements could be material, either individually or in aggregate with other misstatements. So whatever number you are looking at on the financial statements prepared by a client, as an auditor, you always need to assume that there is something wrong with that number. It could be wrong on its own, or it could be wrong in conjunction with other numbers. So there's always an element of risk in your revenue number, in your fixed asset number, in your inventory number, in your receivables number, in your payroll number. As auditors, we are trained to expect that something could be wrong in that elements of the financial statements. And in identifying the exposure there's a continuum or a range that we need to look at. It could be a low risk, it could be moderate risk, it could be high risk. If I'm auditing a bank, for example, I will largely expect some like interest income to be a high risk item, right? I would probably feel that inventory would be a low risk item in a bank. So from an auditor, as an auditor, you need to form judgments based on your understanding of the business and based on your knowledge of that environment as to whether a particular element of the financials is low risk, moderate risk, or high risk. Your risk assessment will therefore drive the amount of audit efforts that you are going to attach to that particular item. Control risk. Control risk is a risk that the control that have been put in place by management may not prevent, detect, or correct any misstatement or error in the financial statements. So you know that businesses too are aware of business risk that they face, and it is management and director responsibility to put in place controls that address those risks. If those controls are unable to either prevent or detect a misstatement, it even heightens the probability that there's a material misstatement in those financial statements. In such an instance, you see that the control risk has crystallized. The detection risk is now the one that is very critical to us here as practitioners. Now, you know that as auditors, we have the right to determine the kind of audit procedures that you are going to carry out, having assessed the inherent risk of an item, having assessed the control risk of an item. You are there mandated by the auditing standards to develop an appropriate suite of audit procedures to address those risks. Now, if your audit procedures, however, do not detect material, if they are unable to detect any material misstatements in financial statement, then that detection risk will most likely have crystallized. And in developing, can we please mute ourselves, please? Thank you. Now, in developing your procedures as an auditor, you need to determine the nature, timing, and the extent of those procedures. And that NTE, nature, timing, and extent of those procedures, is going to be influenced by your understanding of the business and your understanding of the entity's inherent risk and the control that they have put in place to address it. Right. So I'm just trying to lay the groundwork for why we need checklists. So please, let's just bear with me for a few minutes on that. We've spoken about this. Now, business risk is the other element. For business risk, it could be business risk to the entity, or it could be the business risk to the auditor. Now, to the entity, the business risk is going to be defined by the circumstances of that entity. It could be due to the nature of the business that the entity conducts, or it could be due to the maturity lifespan of the business. So if you're looking at maybe a bank or a telco or a manufacturing entity, they will be driven by profits, right? So anything that could impact on their ability to make profits is a business risk to them. If you are looking at an NGO, anything that will impact on their ability to deliver value or to deliver maybe support to their target market will be a business risk to them. For the auditor, the business risk is anything, right, that could affect your own ability to continue to be in business as an auditor. And that could be an audit failure. And an audit failure will have its attendant repercussions. There could be litigation, obviously loss of revenue, and there could also be your inability to recover your audit fees. So all of these are audit risks to the auditor. Now, what this means for the auditor is that in putting in place your own controls to address those risks, your controls is not just around the delivery of an audit engagement. Even taking on a client could be a risk, right? Before you accept a client, you need to go through some processes to make sure that the client's risk profile is something that is acceptable to you. You do not want, as an auditor, to accept a client that is too risky, or to accept a client that is very good, but maybe due to its size, relative to your own size as a practitioner, you simply do not have the resources to deliver that audit. right? So if I look at maybe a listed entity on the Nigerian Stock Exchange now, the most capitalized entities on Nigerian Stock Exchange, I think a couple of telecom companies, and then you have a number of cement companies as well. If they come to an audit practice that has maybe 2 partners and 10 audit staff, will it be appropriate of that audit firm to accept appointment by such a big client? It would be nice to have such a big client in your portfolio, but do you, as the audit practitioner, have the resources to deliver a quality audit to that entity? If the answer is no, you need to be able to make that determination and reject that appointment. So that is why, as auditors, you also need to go through an acceptance process. And if you've already entered into a relationship with an audit client and you've been working with them for a number of years, if circumstances change, maybe there are reputational issues, or maybe there are issues around ethics or going concern, or whatever the issue is, if you decide that, look, do I still want to continue with this client, you also need to make a determination as to continuance. Now, what I've just done is to demonstrate to you that as auditors, in establishing your system of quality management, you need to stand back and look at the entire system around the spectrum of your existence as an auditor, your existence starting from when you start to accept clients to when you deliver your reports on clients. And to help you do this, the profession has developed a number of procedures that auditors should go through, and those procedures can actually be summarized in checklists. Now, to be clear, right, when we use checklists itself, in themselves, is not the work done. So let me give you an example. You are auditing a financial statement. One of the items on the financial statement is trade receivables. Right? As an auditor, there are various auditing standards that will guide the kind of audit evidence you will obtain and how you deal with those audit evidence. There's a standard on audit evidence. There's a standard on audit documentation. You are required to make sure that you have complied with the requirements of those standards. In addition to the auditing standard, there are also accounting standards, i.e. IFRS. If you're looking at trade receivables, there's IFRS 9. There are things that you need to do. There's work that you need to check that management has done very well, and you record the evidence you have obtained in line with the auditing standards, and you then evaluate that evidence. Is there a material misstatement from what I have done? So for example, if management has recorded impairment of say 10 billion, and based on the work that you, the auditor, have done, you think that that impairment should be 12 billion. So there's a 2 billion naira difference or misstatement. How have you dealt with that? You are required to record all that in your detailed audit working papers. At the end of the day, however, before you sign your opinion on the financial statements, you then need to, someone then needs to run a checklist and see if all those things have been done. Have we done 1, 2, 3, 4 things required by the auditing standards? Have management complied with 4, 5, 6 things required by the accounting standard? So that's the checklist on the detailed work that has been done. So that checklist is just a summary of what we have done or what we have not done. The checklist in itself is not a replacement for the auditor doing the appropriate detailed work. Now, what are the types of checklists that we have? If you look at some of the literature around you, we have optional checklists. Those are checklists that gives you a number of options. Either it's yes, no, or not applicable. This is what a lot of us are used to, and we'll be looking at a couple of those checklists in the next few minutes. You also have some checklists that give you 2 alternative answers, and you are required to pick one of them. And then you also have checklists that, you know, look at a continuum. They enable you, they require you to grade something. Oh, how well has this thing been done? Say on a scale of 1 to 5, 1 being lowest, 5 being highest. How well has it been done? You then need to answer that question. Now, the important thing to note, all right, is that when we are applying the checklist, depending on what stage of the audit we are applying that checklist must always be benchmarked against a criterion. That criterion could be an auditing standard, it could be an accounting standard, or it could be laws and regulations. So for example, CAMA has certain minimum disclosure requirements on financial statements. So when you're completing a financial statements checklist in Nigeria, it is imperative that you look at the requirements of CAMA and make sure that those financial statements meet the requirements of CAMA. Also, the FRC Act and the regulations and the rules and regulations issued by the Financial Reporting Plan also have certain things that deal with disclosures on the financial statements. When you are reviewing your client's financial statements, you need to be aware of what those requirements are and be able to check your client's financial statements vis-a-vis those requirements. So which is why I said earlier on that checklists in themselves are good, they are very important, but they are not a substitute for the detailed work that you as the auditor are expected to have done at every component of the financial statements. Where can we use checklists in an audit? Right? If you are not taking anything away from this webinar, please just go away with this particular slide I'm showing. We've spoken about client acceptance and continuance. Do I want to accept this client, or do I want to continue with this client? So you can develop a checklist for that. In your risk assessment, your inherent risk assessment, so you're looking at various components of the financial statements. Like I said earlier on, if I'm looking at a bank, right, I will probably think that their credit assets, say loans and advances, will be more high-risk item than when I'm looking at inventory. However, if I go to a manufacturing company, right, and we have a lot of manufacturing companies that even sell that they collect cash in advance before making sales to clients. Now, if I look at that manufacturing company, my inherent risk assessment will be that inventory is a high-risk item because of the nature of the manufacturing process, and that trade receivables may not be such a high-risk item because this business collects cash in advance, so they are not exposed to trade receivables or bad debts. Right. However, for me to make that assessment, I need to do some procedures and complete a checklist. Now, that checklist will be completed based on what I've seen, but also based on professional judgment. Again, when we're evaluating internal controls, and these are controls that have been put by management. Remember, when we're talking about audit risk, then we talked about control risk. That's the risk that a control may not prevent or detect a misstatement in the business. We need to form an assessment, right, as to how well that control has been designed and implemented. Right now, this will become more and more important for us in Nigeria going forward, especially for auditors that work on listed companies or work on public interest entities. And that is because effective December 2023, as some of you may be aware, auditors are now required to issue an opinion, an external opinion on internal controls over financial reporting, in addition to existing opinion on the financial statements. So from December 2023, auditors of listed companies will be issuing two sets of external opinions. One of the critical inputs to issuing an opinion on the internal controls over financial reporting is our internal controls evaluation. And that evaluation will be asking certain questions. Has management done this? Is this in place? Is this controls appropriately designed? Can it prevent or detect errors? Are there compensating controls? Are there complementary controls, etc.? A lot of assessment will be done using that checklist. Another area where we can use checklists is around fraud risk assessment. And fraud risk, we're simply asking the question, what is the assessment of fraud in this business? What is the likelihood of fraud in this particular element of the financial statement? Now, in doing this, we need to remember at the back of our mind that as auditors, it is not our primary responsibility to prevent or detect fraud. That is the responsibility of the directors. However, under the auditing standards, we are required to design our audit in such a way that we can identify material misstatements due to fraud. right? So in all of these, we then need to have a suite of questions that we'll ask ourselves based on the evidence we have seen and based on our understanding of the client's business and the environment, whether the risk of fraud is high or low. But the risk of fraud is always there. Now, we can also use checklist as part of our substantive testing. Substantive testing is what we used to call back in the day as tick and bash, right? So if you are doing a test of inventory or a test of cash and bank balances, what are those procedures that you will go through? So you have your work papers on one hand. Your work papers will include the detailed procedure. Check, obtain bank confirmations, test bank reconciliation statements, test the translation of FX balances, test the quality of bank depositories, etc. Those are your detailed audit procedures in your work papers. After you have done all that, before you then sign your opinion on the financial statement, you then have a checklist that says, have we done this? Have we done 1? Have we done 2? Have we done 3? That is a checklist on your substantive test, and that will also form part of what gives you the auditor comfort to issue your opinion. Now, the last 2 types of checklists are very, very important, and we'll look at samples of them in the next few minutes. You, as the auditor, you have carried out your procedures over all elements of the financial statements. You have also carried out some procedures around the governance structure. You have looked at minutes of meetings. You have looked at contracts. You have done your fraud risk assessments. You have carried out a number of other non-numeric audit procedures. At the end of the day, as an audit partner, the guy who is going to have his name on the opinion, you want to ask yourself, am I happy with all what we have done? So you see, all the procedures that we have been mentioning about on those specific components of the financial statement, somebody will now have to carry a checklist and complete that checklist. And that checklist, for it to be a quality one, it must reference a criterion. That criterion is either an auditing standard, it is either an IFRS, or it is either an element of laws and regulations. Because at a minimum, you want to make sure that your working paper, as well as the financial statements that you are going to opine on, meet the requirements of all those checklists, right? You want to ensure that that is done. And what we then have over the next few slides are the things that I've just spoken about, the need for each of those checklists, where they come in at every stage. So I'm not going to spend so much time on these sets of slides. What I actually want to spend time on are some checklists, which I believe that will be of use to members. And we have the full checklist, which I've shared with Mr. Roku before this session, so you can look at that. Now, review of working papers. Review of working papers is very, very important because under ISA 200, ISA 200 is on audit documentation. You must have a minimum level of checklist that ensures that key information are included in all your documentation, right? Now, remember I said that your working papers are one thing, i.e. your detailed working papers on every component of the financials are one thing. Beyond that, you also need to have checklists that shows that you have checked that. And those checklists are part of your systems of quality management on an engagement. Your checklist should identify that, look, you have identified the assertions being tested. What is the assertion? Is it completeness of the balance? Is it valuation of the balance? Is it the presentation and disclosure of the balance? Your working paper should evidence that. And then your checklist will then make double sure that indeed those things have been done, right? You also want to show, for example, the extent of testing that you have done. Have I done appropriate sampling? Have I target tested specific items of risk or materiality? You need to record that in your checklist, even though you've already done it in your working papers. So have I done this thing as required by a particular standard? You also need to do all that. Now, I will show now what you see happen in place is that whilst the auditing standards in themselves do not have checklist to guide them. But if you go through the requirements of the standard, you can then decipher what and what as an auditor you need to do. Now, so what I've done is I've looked around and looked at a number of places where we can ask ourselves, is there a checklist that our members can leverage? So you see some of these checklists are designed by some professional accountancy organizations. Others have been designed either at the country level. But what you find out is that a lot of accounting firms have, based on their own reading of those standards, they have also developed their own checklists. And those checklists they have developed are proprietary materials. Now, what you see here is I picked something from the Institute of Chartered Accountants of Pakistan, and they have developed a checklist for the review of audit working papers. And I've also included the link. The full documents, like I said, I've already shared. But just to show you an example of that, what does this checklist show? It shows certain questions that have been asked, right? And it requires the engagement team to document whether they have complied with that requirement of the law or with the requirement of the standard. And if they have complied with it, they are then required to show where they have complied with it. So there's a reference to the working paper, and also there's a brief description of the documentation. Right. So if we look at this sample, for example, if we go to item 5, which is on materiality. Now, materiality is governed by the International Standards on Auditing 320, audit materiality. Now, based on the requirement of the standard, you know that there's a work paper where you've tested materiality, or where you've determined your materiality. Now, what this checklist has now done is to ask yourself, were the appropriate benchmarks and thresholds identified? And was judgments appropriately used in determining materiality levels? So this is a type of optional checklist. Remember, we talked about optional checklist and we talked about graded checklist. Most times, what you will see in audit checklists are that they use the optional checklist. So this is a yes or no. Right? It's a yes or no. If it's a yes, it means that you have done the work, and you can then put a description of where you've done the work and then reference the work paper. If it's a no, it means that you haven't done the work. What that means is that at this stage, whoever is reviewing this checklist then needs to make sure that we go back to our working paper documentation and make sure that we address the need of the standard. Right? If I go again to maybe 5.2, it says, did the engagement team consider whether misstatements in certain amounts lower than the overall materiality could reasonably be expected to influence users? What this is asking is a requirement of the standard. You know, as an auditor, when you identify misstatements or you identify errors in a financial statement, you need to make a decision whether that misstatement is material or not in the context of the materiality that you have set on the engagement. Even where a misstatement is below that materiality, it means that you can still issue a clean opinion even where the client does not correct that error. However, materiality is a question of judgment in itself. Yes, there's a number to it, but there's a judgment to be applied in using that number. What the standard ISA 320 is asking you is, have you considered if there's an error, even though it is below the overall materiality, do you think it will influence the users of the financial statements? If the answer is yes, have you done the work? Show us where you have done the work. If the answer is no, you need to go back and do the work. Now, as an auditor, for example, when I attend the AGM, especially of listed companies, one of the things that shareholders will always ask questions is around directors' remuneration. They will say, oh, why the directors, especially where the company did not declare any dividend, or the dividend was smaller than the dividend of last year. Now, they will then ask you, why is directors' emoluments increasing from, say, 100 million to 200 million, right? Now, it could be that as the auditor, that 200 million directors' emolument is below your overall materiality. Let's say your overall materiality is 1 billion. That amount is below it. However, and this is where judgment comes in, if you think based on your knowledge and experience, that error could influence the users of the financial statement, then you need to consider whether you have you used an appropriate rationale to make a decision. So even if I see an error of 100 million or 200 million in, say, inventory, I may let it go. However, if I see an error of 100 million in directors' remuneration, I may recommend to management to correct that error, because I know that is going to be of influence to the users of the financial statements. So if you then look at all of this, and this is just a couple of pages from this checklist. Again, this checklist also talks about audit sampling, right? How have you selected your samples? Have you selected samples based on value or materiality? Have you selected all items over a certain amount? And have you selected certain items just to update information? Now you see that this procedure, this checklist 24.1 has been referenced to ISA 500. ISA 500 deals with audit evidence. So again, we're asking this question because the auditing standard requires you to have done these things as part of your working papers. Do them and document them as part of your working papers. So this is some of the things that you are expected to have in your audit checklist. And at the end of the day, the audit team is supposed to sign this off and keep it as a record of work done. Now, another type of checklist that is important is the review of financial statements. Now, review of financial statements, particularly as an engagement leader, for example, it is absolutely critical to me, because I want to make sure that my client has done the right thing. Things have been properly accounted for and that they have been properly disclosed. So the essence of running a checklist on review of financial statement is to check the presentation and disclosure of items. So you want to make sure that the presentation and disclosure, they comply with the accounting standard, that the client has, disclosed everything that the accounting standard requires them to disclose. We also want to make sure that the client has disclosed everything that laws and regulations require them to disclose. Right, so you will need to have two sets of checklists when it comes to looking at the financial statement. One is for the FS disclosure, make sure it complies with IFRS. The other is a disclosure checklist that deals with laws and regulations. And we can look at a couple of them here. So for example, on Ican website, and this is available on Ican website. Now, you know that in an audit opinion, when you're issuing the opinion, amongst the things you say is that 1, the financial statements comply with IFRS. 2, you say that the financial statements also comply with the requirements of CAMA and with the requirements of the FRC Act. As an auditor, how do you evidence, right, that you have done the right checks to enable you issue that opinion? The checklist that you have and that you have completed and filed as part of your working papers is evidence to support you claiming that the financial statements comply with CAMA and comply with the FRC Act. So this checklist, for example, is available on Ican website, and I've just done a snapshot of a couple of pages. Again, you will notice that the checklist is a yes or no type of checklist, and this again will be referenced to either CAMA or will be referenced to FRC Act. Now, one of the questions or some of the questions here talk about the general information. The following matters disclosed: information about the entity's financial liquidity, profitability, and viability.
Hello, sir.
Yes.
We have less than 5 minutes.
Don't worry, I'll take less than 5 minutes.
Okay.
All right, so this is a checklist on disclosure or on compliance with CAMA and the financial reporting standards. It talks about the components of the financial statement. It also talks about other disclosures, for example, accounting rules, notes to the accounts, what needs to be included in them. So this is covered under the checklist that you find in Ican website. For the financial statements disclosure checklist, you have a number of auditing firms that have developed their own checklist using their understanding of IFRS. So what you see here is that a lot of the big four already have their own checklist. There's the PwC IFRS checklist. There's EY's disclosure checklist. There's KPMG disclosure checklist as well. This is in reference to IFRS. Now, I'll just take 1 second to show you what one of those would look like. So, for example, this is a PwC checklist, and what you will notice is that this checklist references the accounting standard. So this column here is a reference to IS1, and you have a checklist that has thousands of figures that reference the various elements of IFRS. And these are yes or no questions that you're expected to complete before you sign off on the financial statements. The key limitation of checklist, and this is very important, just like every other audit process, the key limitation is that it should be guided by professional judgment, right? Even when you have answered yes in a checklist, you need to ask yourself, is that yes a minimum requirement, or is there something more I need to do? Again, if you have answered no in a checklist, you then need to ask yourself, is that no a material issue, or is this something that has been compensated for by somewhere else? So just like every other facet of an audit engagement, checklists are limited by professional judgment, and that professional judgment is something that is key, and we need to improve on it by making sure that we consult appropriately and that we also continue to develop ourselves. Thank you very much, Mr. Moderator. I think that is the end of my presentation. I know it's been quite fast, and probably 1 or 2 questions that I will need to ask to clarify for that. So I'm happy to take that on board now.
Yeah, thank you so much, Mr. Oladipo. You will agree with me that Mr. Oladipo has been able to do justice to the paper. He has been able to take us through a whole lot. And at the end of the lesson, we'll be sending you the presentation slide. At this point, I want us to signify by raising our hands up if you have any question for him, question relating to what he has said or what has been bothering you before now. So anyone with question for Mr. Oladipo, let's raise our hand so that we can assess and give us number. Want it to be orderly. I have Mr. Tanwa Alamutu. Any other person? So we don't want, our time, we have Idiat Azan, that's number 2. Any other person? So if you can have one more, that 2, we can be okay with the 2. Please help us to thank Mr. Oladipo. He has done well. So I don't want any other person to thank Mr. Oladipo. Just tell us your name and your membership number and go ahead. Yetunde Oyekon, that's number 3. We have those 3 to take their question in that order. No lecture, no appreciation. Tell us your name and tell us your question. Number 1, you have the floor. Please unmute yourself and ask your question. Number 1, are you still there?
Number 1 is Tanwa Alamutu.
Go ahead, please. Okay, let's have number 2. Idiat.
Okay,
All right.
my name is Idiat Azan, MB049264. So I want to know the significant difference between overall materiality and performance materiality. And I will appreciate if you can put figure to explain the difference between the 2. Thank you.
That's taken. Mr. Oladipo, do we take the 3rd question so that you just answer at a go?
Yes, please.
Okay. So, Oyeko, please, your question.
Good morning. Yes,
Morning.
Oyeko, MB 040894. Please, I want to ask if audit firms actually go through, use this long list of this checklist you have given, and then audit test during an audit exercise. That is, I want to know if they actually follow it religiously, and if so, how that's possible in an environment that is automated.
Okay, I think the point has been made. It's Oladipo. Please, can you respond to the questions?
Okay, all right, thank you. Can we unmute ourselves, please? Olanike, I think there's some noise coming from your system. Okay, let me take the second question by Yetunde Oyekan, because that's borders directly on the checklist. Yeah, okay, thank you. So let me take the second question by Yetunde Oyekan, because that talks specifically about checklist. The answer is that should be the case. Your question was, do audit firms truly use the checklist? I say that should be the case because the checklist is what gives you comfort at the end of the day that you have done a proper audit. Now, you can spend 1 month or 2 months on the field, you do interim audits, you do hard-close audits, you do year-end audits. In aggregate, you have spent 3 months doing an audit. At the end of the day, you want to have a summary of all that work done and make sure that that summary demonstrates that you have met the professional standards. That checklist is what enables you to do that. And I know that a lot of the firms are doing that. And to be clear, this is not just limited to the Big Four. You have some other small and medium practices too that I know use checklists. You know, the robustness of your checklist is influenced by the knowledge and experience of the standards and also by the complexity of the client that you're working on. So the extent of usage or the robustness of usage might differ, but fundamentally, a lot of people are using it. And hopefully by the time we start doing things like maybe a review of professional practice, either through Ican or the Financial Reporting Council, more and more firms will be using this. Now, even in an automated environment, in fact, it is actually easier and more important to use a checklist in an automated environment. A lot of the checklists that some of the bigger firms use are actually automated checklists that you can generate based on your assessment of which components of the financial statements are applicable or which auditing or IFRS standards are applicable. So it's actually possible and even better to use checklists in an automated environment. Now, I hope that has answered your question. The first question, going back to Igds Azan, is what is the difference between overall materiality and performance materiality, and maybe to use some illustrations. Now, ISA 320 that deals with materiality requires the auditor to use his professional judgment, looking at certain parameters to determine materiality. The essence of materiality is to guide you in the extent of testing that you are going to do. If you pick a company, say some of the biggest companies on the stock exchange, you are looking at an MTN or a Dangote Cement, you cannot audit every transaction that they do. You cannot audit every balance on their statement of financial position. What you need to do is to sample some of those transactions, either based on value or based on risk. And what drives that sample that you're going to select based on value? It is your assessment of materiality. So you've spoken about overall materiality and performance materiality. So I'll just use some illustrations. Number one, the most important thing for you to do as the auditor is to define your benchmark, i.e. what is going to be my basis of determining materiality. For most times, for a profit-oriented entity, the basis will be the profit before tax. Right? But in some cases, you could also consider using revenue, or you could even use an average of 3 to 5 years profit. If it's an asset management company or an investment management company, you could use things like total assets or net assets. Again, your assessment of materiality will reflect your understanding of the business, and that is where knowledge and professional judgment comes in. So the standard does not prescribe a particular materiality. It gives you a range of options, but it's left for you to determine what to use. Now, if I pick a typical profits-oriented company, right? And I see that that company has a profit before tax of 10 billion naira. So just using numbers to illustrate it, if it has a profit before tax of 10 billion naira, and I say as the auditor, I want to use PBT as my benchmark, and to that benchmark, I will apply a 5% materiality. What that means is that I'll look at 5% of 10 billion naira, which is 500 million naira. My overall materiality becomes 500 million naira. Now, what does overall materiality mean? Overall materiality means that if I look at all the audit differences or misstatements or errors during my audits, that if the aggregate value of those misstatements is less than 500 million, and the management has not corrected the accounts, I can still say that the financial statements show a true and fair view, even if I have errors of 450 million naira in aggregate, and my overall materiality is 500 million naira. I could still say that the financial statements show a true and fair view, as long as I get a written representation from management that they are aware of those misstatements, but have not corrected them because they are not material. However, you then come to your performance material. So your overall materiality is assessed at the financial statement overall level in helping you to form the appropriate opinion. However, your performance materiality is that materiality level, which is below your overall materiality, that guides you in selecting components of the financial statement that you will subject to audit procedures, right? So, and overall materiality is typically a percentage of, performance materiality, PM, is typically a percentage of overall materiality. In determining your performance materiality, you consider certain things. What has been the history of misstatements or corrections in the past? What is the inherent risk assessment? I.e., do I think that this is an audit where I will have a lot of audit adjustments or not? Is this an audit where a lot of the numbers are susceptible to misstatement because of the inherent risk? So you consider all those, and then I can say that, look, if my overall materiality is 500 million, I will take a haircut of 40% and then arrive at my performance materiality. What does that mean? Is that out of my 500 million overall materiality, I'll shave off 40%, which is 200 million. And therefore, my performance materiality will be 300 million. What that means is that when I look at all elements within the client's income statement or their statement of financial position, if PPE is 3 billion, I will select to test PPE because it is above my performance materiality. If inventory is 1.5 billion, I will test it because it is above my performance materiality. However, if interest income is 200 million, I may choose not to test it because it is below my performance materiality. So your performance materiality is that materiality level that enables you to select elements of the financial statements either to test or not to test them. However, in all of these, you need to bear in mind judgments. So it is not just about the number, you also need to bear in mind judgment. So I could have, in the example I used during my presentation, I could have directors' emoluments of 200 million. It is below the performance materiality of 300 million. But if I think that shareholders are going to be asking questions about that, I could also decide to test it, even though it is below my performance materiality. That is where the professional judgment comes in, based on my knowledge of the business and the environment in which it operates. I hope that has answered your question, Igds Hassan.
Great. Thank you, Mr. Oladipo,
Yes,
for your
thank you so
thoughts.
much.
We have some other questions sent to us, and as many that still have questions, please, you can send to us. Because of time, we'll not be able to take further questions. At this point, I will quickly call on Mr. Akinwumi, Mr. Tosin Akinwumi, FCA, to quickly appreciate our speaker for us. Mr. Tosin, please.
Thank you very much, sir. I want to appreciate Mr. Ladele Oladipo for the way he did justice to this topic. We really appreciate you on behalf of the entire team, membership and the executives of the Local Bagada Education Society. We want to say thank you so much for coming and for taking us through this topic, audit engagement exposures. I think the members here and participants here can bear witness that you have actually done justice and you have actually learned from your wealth of experience. Once again, we say thank you, sir, and God bless you.
Thank you, Mr. Kiwumi. For Mr. Oladipo, we will reach out to you. We have a token for you, not in cash. It's just a token of appreciation, and we will let you have it. Thank you so much.
Thank you very much. Like I said, it's been an honor and a pleasure for me to be here, and let's keep the discussion going. Thank you very much.
God bless you. Moving on, we have our second paper presenter right here. And here we have Mr. Osime Obaloje. Mr. Obaloje is a partner in the financial service practice of KPMG Nigeria. He has 16 years plus of in-depth professional experience in audit assurance services across a broad spectrum of clients within the financial service and the real estate space. He has also assisted clients with cross-border capital raising, credit, risk, governance, and regulatory review. Osime was a global mobility program to KPMG Ireland in February 2017 for 26 months, working extensively with global clients operating in the banking, aircraft finance, and leasing industry. In addition to IFRS, Osime has experience across multiple financial reporting framework, such as US GAAP and Irish/UK GAAP. He is an Ican Prize winner and has received the recognition award for excellence in leadership. Osime holds a degree in physiotherapy from the University of Ibadan. He is an associate of both the Institute of Chartered Accountants of Nigeria and the Institute of Chartered Accountants in England and Wales. He is also an IQ business and finance professional and has an international certificate in banking risk and regulation from the Global Association of Risk Professionals. He enjoys reading and traveling. Dear Ilupeju Bagada District Society members and other participants, I hereby introduce to you our second paper presenter, Mr. Osime Obaloje, who will speak to us on maintaining acceptable audit working paper files, leveraging on effective and efficient technology. Over to you, Mr. Obaloje.
Thank you very much, Mr. Oladipo, and I start on existing protocols. Good morning, members of this distinguished district. And it's a pleasure to be here. And as the chairman and my co-presenter have said, this is a two-way learning process. So it will be useful for me to also, in a sense, learn from you as well. I recognize that this is a diverse and a mixed setting where we have professional accountants in the business, in the academics, as well as in practice. But the topic I'll be presenting today, in a sense, provides insights, managing documentation. So for purposes of this presentation, I will switch off the video, but also share my slides such that I manage bandwidth and switch on my video after the presentation. I'll be sharing my presentation now. I want to confirm you can see my slides, please.
We can see.
Oh, great, great. Thank you very much. Okay, so as Mr. Oladipo has said, I will be presenting on maintaining acceptable audit working paper files, leveraging on effective and efficient technology. For purposes of this presentation, this is the agenda and the outline that will take us through in the next 30 minutes, where I'll just set the context. I'll provide what ISA requires, international standards in auditing, as well as principles governing maintaining working paper files. I'll also talk about the evolution and trends with regards to how these have been maintained over the past few decades. Then also, what are the options? We have technology-based tools. What are the options available for use by practitioners, and the next steps? In terms of setting the context and our introduction, I'm going to talk about two real-life scenarios where, and this happened during the COVID pandemic period, where there was lockdown, where there was restrictions of movement, and two ongoing audits simultaneously at the same time, one led by Mr. A and the other by Mr. B. For Mr. A, during that period when COVID restrictions came into play, the audit was ongoing. However, because of how they maintained their files and because of how the files were processed, it was processed manually, it was paper-based, and it was stored in archival files. Because of this, the audit had to be suspended, and the audit only resumed after restrictions were lifted. 1 year behind schedule, client service disrupted, and overall fees not earned. Mr. B, on the other hand, proactively and based on its seamless transition to electronic means of maintaining working papers, this same period as well, executed an engagement from start to finish, completed it without having to go to the client site, without affecting client service, and earned the fees. The difference between Mr. A and his team and Mr. B is strictly how they have decided to process and maintain their working papers. One paper-based, the other electronically. And that is really the thrust of this presentation. In terms of the ISA requirements, now, I would want to just break this down so that I also lay the groundwork and the foundation on what exactly are we referring to when we talk about audits, working paper files. Generally, it refers to three things. It refers to maintaining records, specifically of audit procedures performed. It also refers to audit evidence obtained and the conclusions reached by the audit practitioner. So those three things govern what exactly is audit documentation, and it is governed by the requirements of ISA 230. In terms of the purposes of why exactly do you have to document your work, it's clear from ISA 230, it is required because it enables accountability. You are able to plan and perform your audit effectively. For retention purposes, now ISA requires that you have and retain your documentation not for a period no shorter than 5 years from the date the audit is signed. Again, that is a standard requirement. From a regulatory standpoint, the firm may be decided to be subject to regulatory inspection from any regulator. You need to show what has been done. And as the saying goes, if it is not documented, it is not done. So that is why audit documentation is required, where you store audit procedures, the audit evidence to substantiate those procedures and the conclusions reached. That is the reason why. Now, there are 6 fundamentals that are governed by audit documentation, that everything regarding documentation, the processing, the retrieval, the storage, there are 6 fundamental principles that govern this. In terms of maintaining, may I please ask, please you mute yourself, please. Thank you very much. In terms of maintaining confidentiality, audit documentation in itself, and whichever way, must ensure that there is that it protects unauthorized access So if I have no business with that particular file or with that particular working papers, I have no business assessing it. And that's what maintaining confidentiality is, that in as long as the auditor or as a practitioner, I prepare working papers, only people who need to have access have access. So whichever medium you want to use, electronic means, paper-based, it must satisfy this first principle. The second principle is on safe custody. Safe custody meaning the preservation. How is it stored? Is it stored physically in cabinets? Is it stored physically in archival files? Is it stored physically in one particular laptop? Is it stored in servers? How is it stored? That really is the safe custody. And the whole essence is that at every point in time, I should be able to retrieve my documents or working papers. Integrity. Integrity deals with the issue of unauthorized changes. Now, when you maintain documentation or working paper file, it is important that unauthorized changes is discouraged, and when changes are made, they are tracked. That is the difference. Again, I will still come into detail. So when you talk about storing it in a paper form, in an electronic form, it's important that the principle around integrity of that information is kept. You must protect unauthorized changes to documentation. Next is accessibility. Is it easy to access? Is it easy to obtain? Retrievability. In terms of retrievability, I'm asking myself, at any point in time, are there backups? What's the ease of recovery? Are there, again, in terms of disasters, in terms of unfortunate incidents, fire incidents, how easy is it am I able to get my working papers? And retention, as earlier alluded to, it is a statutory requirement that I retain my working papers for a period of time. So these six fundamentals are very critical in how you maintain your working papers. And I will refer back to these 6 principles later in this presentation, such that you see the connection on how paper-based forms or electronic forms meet this criteria. In terms of the evolution and trends, I quickly go to the evolution and trends. For the first sets, if you look at the icon, you can see how it's being prepared, where it was strictly paper-based. I remember several decades ago when I started the audit when I started as an auditor, it was paper where you would have a yellow paper and where you could write in those paper. Nothing was electronic in that sense. Now, even if it was electronic, there was very limited input or involvement in the use of computer. Everything at the end of the day was stored in an archival file and kept in a file cabinet. Well, there were challenges with this, but of course, technology over time has rendered this totally obsolete. When I go to the next trend, there was this dual system. In this dual system, yes, you could use your laptops, where certain products were developed such that you can actually type into that particular system in terms of your audit procedures. You can, but in terms of actually now processing and storage, you had to still print out from the system and maintain in archival files as well as in storage cabinets. So it combined both system and paper. However, it did not thoroughly and totally satisfy certain or meet certain key fundamentals that that area talked about, those 6 fundamental requirements. Now, then let me just quickly backtrack for paper-based. When this time, going to client offices was a logistics operation. it was a full-fledged logistics operation where you could have as much as 20 Arcliver files. You could have several boxes just going to the client's office. Dual system, yes, you carry your laptop, you go, but at the end of the day, you still have to print tons and tons of paper. Storage was centralized, yeah, but again, there was still a challenge around storage and ease of retrievability. Now, in terms of system-based, now this is the third phase of how it has evolved over the years and how we have maintained documentation. The first system-based is when you had several users so for example, you had 5 people using a laptop, but they had to connect centrally to an individual who also was part of the team, but was called the master. So if anything happens to the person with the master file, everything goes, everything. So that master laptop was treated as gold because nothing must happen to that master file. All other individuals will connect to the master file using cables. You could transfer information to other people using flash drives and everything. But again, there was some limitation around this particular system. But it was system, but you can see that there was still some threats around. There was some threats around collaboration among team members. If the master file got missing or corrupted, that was an issue. But it also brought about significant advantages over the paper-based and a dual-based approach. In this particular approach, there was some elements around data protection, password encryption that helped to protect the files. But there was still some limitation. Now, where are we currently, or what is the best practice currently? The best practice currently is where you have individual people with their laptops all connected centrally on the cloud. So when I mean cloud is just like it's not the physical cloud you see, it's not the physical cloud you see, it's data center where you have servers, and those technology infrastructure help ease of collaboration amongst team members. There was no more need for a dedicated master file. There is no need again currently for the use of flash drives and means of transfer. So you can see that it has consistently evolved, and where we find ourselves currently in most cases is centrally cloud-based platforms where audit tools are done. Now, you remember these fundamental principles I've spoken about: maintain confidentiality, safe custody, integrity, accessibility, retrievability, retention. You can see that on system-based, it is highly effective in terms of meeting the objectives of these principles. Highly effective. You can see the green is highly effective. I've decided to use the traffic lights so that just the traffic light approach to give a sense and an indication as to the effectiveness in the use of each of these systems in addressing the fundamental principles. But the paper-based is clearly good because that was what was available then. It worked, it was good, but there were still issues around it. So for example, integrity. You couldn't totally control unauthorized changes. Somebody could just go and clean off something that had been documented. You could, retrievability, you only had one central place where it was stored. And for the most instances, it was either the storeroom, the file cabinet. You could go, it could be scattered. So it was a challenge. Retention was good, but after a while, you could see that the files stored in the Arcliver files molds start growing on them, if water comes there, if flood happens, it affects the entire files. It just destroys the entire thing. So you can see that paper-based, that was a good time. Dual-based, where it is a combination of both system-based and the paper-based, well, you can see Amber, it was moderately effective. There were some improvements around integrity, and that was where integrity was significantly improved upon in terms of restricting unauthorized changes. In terms of maintaining confidentiality on unauthorized access, there was still no significant change with paper-based because you still have to print. In terms of accessibility, retrievability, and intention, you can see a progressive improvement from being good under the paper-based approach to being moderately effective under the dual approach and highly effective under the system-based approach. Now, the question really is, what has shaped the adoption of and a move from the dual approach to a more system-based approach? One that everybody is very familiar with is the COVID-19 pandemic, where there were some restrictions, lockdowns, and if you remember the earlier example I'd given, and I can also attest that to myself, where I actually executed an engagement with my team from start to finish in my house without having to move anywhere. That is COVID-19 pandemic accelerated the adoption of technology, and that is one of the reasons why there's been a steady move to a system-based approach. Remote working, as a fallout of the COVID-19 pandemic, several firms now run a hybrid approach where you come physically to the office, you work remotely. In fact, most employees or prospective employees emphasize that they need and must work remotely. That is, if they detect the market, and that is their requirement, they must work remotely. You must, as employers of labor and as business leaders, as practitioners as well, you must also be agile and move to say, okay, if I must hire talent, and talents have, to a large extent, want to work remotely, you need to also adopt technology that enables you to achieve this objective. International flexibility, the JAPA syndrome. People have left, but you still want to use and utilize the services of professionals who have relocated. The only way to make this happen is through the use of a system-based approach, and for emphasis, the cloud-based approach. Now, these events have shaped the adoption of technology. Of course, with the good comes with the use of technology, there are a lot of benefits, and you will agree with me that the benefits are innumerable. It's so much. You have efficiency has tripled. So what normally a task that would take like 3 days to do, you have certain tools that would assist you in doing it within seconds. And that is the experience I have as an auditor. And I'm sure many of us have that experience as well. Accuracy, it has also enabled that. Enhanced data analysis. I can't overemphasize this, especially as it comes to both for predictive purposes in terms of, so I go to audit a particular client, and first of all, I need to set an expectation as to what to expect. Technology has enabled the process of predictively assisting me in saying, this is the number I expect based on data I have access to. Greater transparency, I can't say much, I can say so much about that. Improved communication and collaboration. I don't, what the system-based approach has enabled is where collaboration is easy between team members. I don't need to be in the same physical location. I don't need to be in the same jurisdiction. No, everything technology has enabled an enhanced risk assessment. On the other hand, unfortunately, there are some challenges. Sometimes the complexity, the costs, data security breaches, maintenance costs, internet penetration. So for you to use a cloud-based platform, you need internet and broadband. As of 2022, the statistics shows that for Nigeria, internet penetration was just about 38%, when in several more developed advanced countries, internet penetration, you have as high as 98%. So you can see that challenges in adopting in our locality and jurisdiction could be a challenge because of the internet penetration. Technical expertise. For you to use some of these system-based, you must be trained. Reduced interaction between auditors and clients. And I can attest to this during the COVID period. For example, everything was, I interacted with clients, and I'm sure many of you did as well, using Teams or Zoom or Google Meet. Everything was virtual, to the extent that sometimes I go to the client when the COVID pandemic was lifted. You go to the client's office, you can actually pass by a client and not knowing this is the person you've actually been interacting with. So that is just a downside, actually. Reduce interaction between auditors and clients. However, with challenges, it can be helped. Now, in terms of technology-based tools, what are the options available? So for the options available, we have what we call the proprietary tools that audit firms have had to develop to meet their specific requirements. So for example, in KPMG, we have what we call the KPMG Clara, and as well as other firms. Again, these tools, what we call proprietary, because it is specific to those audit firms, are usually cloud-based. They're usually smart. They allow for collaboration anywhere in the world. It integrates the ISA methodology. It has tools, audits, technology tools embedded. So you have some forms of AI tools also embedded into the proprietary tools. So it can go on and on, but these are specific to audit firms. So some other firms have Omna AI, other firms as well, Aura. So there are quite a number, Canvas, but those are specific to those firms. In doing that, I can see that in KPMG, we spend millions and millions of dollars just trying to develop this tool. So funding is a challenge in developing proprietary tools. Expertise, you have dedicated people employed just to think, breathe, and live developing this technology for us to work on. So you need expertise to make it happen. Technology infrastructure, it requires the development of data centers, facilities, you have servers. So it can be a challenge getting this in terms of developing your proprietary tools. Sorry, in terms of, yes, developing your proprietary tools. Associated training costs. For you to use these tools, you must know what to do. The training costs don't come cheap. And again, you must also ensure that in developing these tools, it meets the regulatory and ethical requirement. Data protection is extremely fundamental. Confidentiality, as I talked about, as part of the fundamental, is very fundamental. Collaboration, since you can collaborate across jurisdictions, you must ensure that your data requirements, your data protection requirements within the country is not breached. So it comes with a lot of complexity. So while proprietary audit tools are useful, there are also challenges in developing them. But what we see are opportunities for subscription-based tools, and they are available anywhere. So it's like subscribing to Netflix. It's like subscribing to any subscription-based platform where you can subscribe and It is not tailored specifically for your firm. It's not tailored specifically for you. You are just using part of it. These subscription-based tools, based on a research on the internet, so I got some that I have no history. I don't know how effective they are, but based on browsing, I came across quite a number: the Audit Board, Sage Intact, Resolver, Zoho. All of these subscription-based audit tools that where you're unable to develop proprietary tools, you can go on a subscription basis. However, before you even start subscribing, at a minimum, you should, it is my recommendation that your working papers, as opposed to storing them on laptops, at a minimum, they should be on hard drives. They should be on micros. There are several cloud-based drives. There's Google Drives, there's Dropbox, there's OneDrive. At a minimum, I would strongly recommend a shift to storing your information or working papers on these particular cloud-hosted platforms. It comes with a cost, but I would think the benefit outweighs the cost of maintaining your information electronically and on the cloud. Now, the question really is, so as professional accountants in practice, what systems should I go for? I have recommended 5 key areas for you. First is they must be secure. We are dealing with clients. Confidentiality is extremely fundamental. Data protection requirements, you don't want to breach the requirements of NIDA. So they must be secure. That is fundamentally. It must also be secure against possible attacks, cyber attacks. So security is very key. Cost effectiveness. You should not do past your pockets. If I'm just going to say from that angle, it should be cost effective. I don't know would Tawa please stop? You're writing on the screen, please. You have cloud. So again, my emphasis on cloud-based platforms is very key because it allows you to work from multiple locations and anywhere in the world. Collaboration is also key. Automation and scalable, depending on, you don't want to use a subscription-based package tailored for a large client, for a small client. No. So the package must be scalable to fit and suit your client's portfolio. So these are my recommendations in terms of the criteria to meet when attempting to select a system-based software. I don't know how to take this off the screen, but I'll continue. So the next steps, what are the next steps? The next steps as I look into the future is the why. I've talked about what technology can do, the benefits. So the why has been answered. Where do you need to migrate to a technology-based audit? I would recommend the time is now. What do I need to do? In terms of what you need to do, you need to assess, again, your client portfolio, assess your firm's requirements, evaluate your costs. But at a minimum, like I said earlier, at a minimum, it is important that at least you migrate your information to a cloud-based storage platform before you now begin to say, okay, what audit tool will I want to go with? It is important that that is done, because in the event of a disaster, you want to be able to, again, on the fundamentals of ease of retrievability, you want to be able to quickly retrieve the documentation. So that is my first low-hanging fruit I would want you to please implement. In terms of the future outlooks, there are a number of other, I wouldn't go much into this, but it's just to bring it to your informational awareness that our world as professional accountants is changing rapidly. And it is important that we get attuned with developments within the space, such that we are not rendered redundant as professionals. Another session can be used to address this, but artificial intelligence, AI, you've heard of ChatGPT, machine learning, the big data analytics, blockchain technology, cloud computing, all of these, as well as cybersecurity, are important things that as professionals, one, you must keep abreast with, two, at a minimum, have a working knowledge of, and three, invest where applicable in these, such that we remain relevant as professionals. My recommendation to the team currently here listening to me are in twofold. One is that Ican, the great Ican we belong to, can explore the option of providing a platform where firms can band together, especially those that do not have the war chest to develop proprietary audit tools, or think that subscribing to as an individual firm, going to subscribe may be somewhat expensive. My recommendation is Ican can come. Ican has negotiating powers. Negotiate with a particular audit software provider such that numbers reduce cost. Two, this training has provided a good platform where we become aware, but training is a critical and pivotal requirement as you make the journey from whatever phase you are in your practice to a cloud-based platform. Those are my two recommendations, and I'm happy to take on any questions you may have. Thank you very much.
Thank you so much, Mr. Obaloje. You will agree with me that he has been able to really appreciate you, sir. At this point, I want to ask from our members, as many that ask questions should signify, so that we have least signify. If you have questions, we can take it. Question, please. Okay. Question. All right. Mr. Obaloje, please, let's take this question from Mr. Aderemi Fagbile. He asks, he wants to know, how do we tackle the psychological effect that audit is expected to have on the client staff, and the fact that remote does not have such effect on the staff? I hope you were able to get me.
Yeah, so how do we tackle the psychological effect that audit is expected to have
on the client staff, and the fact that the remote does not have such effect on the staff? That's question one. He asks another one. He wants to know that, he said, the audit should have effect of deterrence and the sense of all the activities are being monitored and scrutinized. The use of remote work and technology has eradicated this effect. So we want to know how we can sort this out.
Okay. Okay, the first question is not very clear in terms of psychological effects. I'm not able to really interpret or say what the ask is here, but if you can
same here, but what I'm thinking is, mere looking at somebody, you may see, you may be able to identify or see the posture, the feelings, you can use the psychology to maybe when answering question or asking or responding to interview. So I think maybe that is what, I don't know, Mr. Fagbile is on call, but maybe he didn't want to ask it. So that's what I'm just thinking, you know, when you are one-on-one with somebody, you can decipher, you can be able to psychologically read the mind and see through gesture, through reactions and the rest, maybe.
Okay. If that is the case, so of course, with technology, as I'd initially alluded to, it comes with its downsides, and that's sometimes limited interaction. And you can't take away the beauty of physical interaction. You can't take away the beauty of seeing someone, because non-verbal cues give over 70% of communication. So, well, to a large extent, what we've been able to do from my experience, as much as possible in sessions, we have videos on. Two is the clients, whatever tool you have, the big picture is integrity of the information provided and being also able to get factual basis from the client. So the big picture for us in most particular instances is we are also able to provide questionnaires. We intermittently, so remote working, in my opinion, should not be practiced 100%, except where unavoidable. But where it is not avoidable, I would prefer a hybrid mix. But where it is avoidable, where it is not avoidable, then as much as possible to be able to get the physiological reactions, if I understand, if that is the question. Your videos can be on every now and then. Extensive interactions with the client, such that you ask questions in different ways. So you ask questions today in this way, tomorrow you ask questions in the other way, such that there is consistency in the information provided. I hope that helps to answer the first question, but if it doesn't, I'm able to provide further clarification. In terms of the challenge of the second question, I think deals with monitoring effectively. So, because when you work remotely, the challenge is how do you ensure that your staff is doing work and not just doing something else? Well, how we've been able to overcome this from my experience, and I'm able to we also want to learn from you as well, because sometimes it could be a challenge for us. But how we are able to ascertain this is through, one, setting work and outcome-based work. So you start clear timelines to say, based on a certain period, I need to have X, Y, Z. Secondly, the tools, the audit tools is extremely fundamental and key because it also enables collaboration. So you can also always go to the person's work area and check the status of what he's expected to have delivered, where he is. You can actually see it's like a tracker, it's like a dashboard. So you can't hide. So that is another way we've been able to ensure that monitoring is also very effective in terms of making sure your people or staff working remotely are doing what should be done. And that's why I'm pushing that you adopt technology where necessary, such that at a glance, you are able to see what this person is doing, what he's meant to have delivered, the progress of work that also have been done, and also checking that he's in the team. Because if you're collaborating, it's like WhatsApp, you're online. So you know the status will show you're online. It also tells you you're online and you're also working as well. I hope that helps.
Thank you so much, Mr. Obaloje. On behalf of all of us here and others that have joined us from various places, both within and outside the country, I want to say thank you to you for accepting. Alaji, hold on, please. I want to say thank you to you for accepting our invitation. Thank you so much. We'll reach out to you and with our token. But it's not in a monetary term, please. Thank you. We really appreciate you. We hope that when next we call on you, you will oblige us. Thank you, sir.
Absolutely. It's my pleasure to be here, and thanks for having me. Thank you.
All right. So moving on our program, we're going to have our Vice Chairman, Dr. Kolawole Bisiriyu, to come up now and give a vote of thanks. Thereafter, the Chairman, Professor Godwin Oyedoku, may have few things to few announcements to make. But now, Alaji, please unmute and give your vote of thanks.
Okay. Yeah, yeah. Good afternoon, everyone. On behalf of the entire membership and the executive committee of the Model District, Igds Bagada and Society, ably led by Professor Godwin Emmanuel Oyedoku, we would like to thank our presenter, Mr. James Obaloje, a partner with KPMG, for his highly enriching presentation. It was indeed a revealing moment for all of us. He has provided a number of ideas for us to thrive as a member. So, Mr. Obaloje, silver and gold we have none. We can only thank you and pray that God to continue to elevate you. We do hope whenever we call upon you next time, you'll be with us. To our ever attentive members and audience, thanks for your time. We sincerely appreciate your attention and contribution. Thanks for your interest in joining us always for our ever-rich seminar and technical session at no cost to anyone. This is a course of our founding fathers and our IPC Edda Gbenga Omidiji. Kudos to our powerful ESCO and organizer of this seminar. We have no doubt in your capacity to deliver as you always deliver always. That quality you can always prove in Igds. Thank you all.
Yeah, thank you, Dr. Kolawole Bisiriyu. My chairman, sir, Professor Godwin Oyedoku, you have the floor.
Thank you so much. Thank you so much, and I want to say thank you to all our paper presenters. Of course, the authorities of our district society has been over time acknowledged, and we want to say thank you for the support that we have witnessed so far here. As at this count, notwithstanding those that have exited this platform, we have about 180 thereabouts that joined this session, and I want to say thank you for the trust every one of you repose in us, and we can always do better, and we will continue to do better. Like I always tell our people that we have a template, and the template is such that it's robust. Ours is to just develop mind and ensure that every member of our district society can stand everywhere, anywhere, and defend the cause of accountancy wherever they go. We want to say thank you to everybody. I don't know whether Elder Midiji is available, because he couldn't talk to us very well the other time because of time. But if he's not there, I want to say thank you, and that will be all from my side now. Thank you so much.
Yeah, that's all from the side of our chairman for now. As well, we are bringing the meeting to a close. We'll take the Ican item first. Thereafter, we take the national item. Doctor, all right.
Let's go, Ican fount of treasure in triumph of an race, standing stronger in harmony Chartered Accountant of Nigeria. Noble Ican, noble Ican, your accuracy we cherish. We uphold your integrity.
Okay, thank you so much. Before the coordinator will talk, I want to recognize all chairmen of other district society. I know I'm seeing somebody like Sesson. If Sesson is there, can you just say hi to everybody and let's have a word from you as we are going.
Oh, thank you very
Please,
much.
Sesson, unmute yourself.
Oh, thank you very much, Professor Godwin Oyedokun, the chairman of the Model District. I want to join my voice to say this is a fantastic presentation indeed by the Model District. Kudos to you and your team and greater heights as we move on in the journey. Thank you very much, sir.
Thank you. Do we have any other district society chairman there? Please, I don't want to overlook you. If you are there, just unmute yourself. Do we have any? Okay, fine. Let's continue.
See whether it's okay because